Investment instruments include stocks, bonds, and commodities. Exchange-traded funds, ETFs, provide diversified market exposure. Mutual funds pool investments for diversification and risk management. Derivatives, including futures and options, are financial instruments whose value is derived from underlying assets. Forex trading involves the exchange of currencies, while REITs concentrate on investments in real estate properties. Alternative investments like blue-chip stocks can potentially increase portfolio returns, but also carry increased risks. Financial metrics are essential tools for evaluating potential investment opportunities. Key metrics include earnings per share, EPS, price to earnings, PE ratio, and return on investment, ROI. Book value, price-to-book ratio, and dividend yield further aid in making informed investment decisions. A stock signifies ownership in a public company. A share represents a single unit of that ownership. Public companies offer shares to the public via stock exchanges, often through an IPO. A bull market features rising stock prices and increased investor confidence. Conversely, a bear market is defined by falling stock prices and widespread pessimism. Volatility measures the extent of price swings in the market or in a particular stock. Market capitalization represents a company's total value, derived from outstanding shares and stock price. Liquidity measures the ease of buying or selling an asset without significant price impact. Assets are a company's resources, while liabilities are its debts and obligations.